Hi everyone, welcome to the channel. I'm Don Singletary, and today we're going to talk about trading setups. What makes a good trading startup? Do you have to monitor the news 24/7 to be a good futures trader? Are we able to find trades that truly no one else sees? And some other questions too, like is it okay to make small trades, or should you always try to hit the home run every time at bat? That and more coming up right now. If you're new to trading futures, you may not know about Globex, Globex. Any trading that happens outside of the regular day trading session hours, which Eastern time are 9:30 in the morning until 4:15 in the afternoon. Now, the stock market closes at 4, but the futures in the day session continue to trade until 4:15 p.m. If you want to know more about the Globex, there's a link below in the text that can explain that to you. Now, the reason I brought that up today was this morning something very interesting happened at about 7 o'clock Eastern time. That's before, 2.5 hours before the day session opened. And sometimes there's some great trades on Globex, and I'll show you one right now. Now, about 7 o'clock in the morning was an occurrence I'll tell you about in a moment, but it caused the market to head down pretty rapidly. Now, the guideline for the sell signal rule is the red line over the green line in the MACD, and both of those must be below that MACD 0 line. So we got a sell signal sold about 90.50, and about an hour and 20 minutes later, you can see the green dot down that says exit in the MACD. The convergence of those lines coming together is definitely a loss of momentum, and that would have been a sign to exit the trade for sure. Now, many traders, there's no trader that gets all of a move all the time. It's just impossible to know that. So if you get a good portion of it, that's good too. For example, you may have sold at 90.50, and then right about here, you see we've got 1, 2, 3, 4, 5 5-minute time segments. That's 25 minutes. The market went down no further, and you already had about an $80 profit at that time. If you had chosen to exit at that particular place, you would have been probably very right to do it, because in 25 minutes, if the market doesn't move, you definitely are losing momentum. And that would have been a nice trade, about 25, 30 minutes for an $80 profit. If you'd stayed in for the whole thing, you would have seen down with the green circle with exit written over it on the MACD. That's the point where the green and red lines are coming back together. It's called convergence, and that would be a sure sign to exit the trade right there. It would have been a great trade too, about $180 profit in about an hour, 10 hour and 20 minutes in there. And that would have taken a nice chunk of change from the market for your pocketbook. Now remember, this trade was like 7 o'clock in the morning, and I always say you should get that morning newsletter from somebody to know the important dates and times for the day. But this all happened at 7 o'clock, an hour before I received the CNBC Squawk Box notification. What happened was our president blocked semiconductor purchases for the tech giant Huawei in China, and that's what tanked the market so early in the morning. Okay, if you're new at futures trading, it's a lot of details, and they can be very daunting. There's a lot of things to try and remember to use at one time. A lot of moving parts in learning to trade futures is what I'm trying to say. It's not unlike the experience that almost all of us have had of starting a new job. You got a new location, new people, new places to find things, personalities to deal with, the expectations of your employer, and do they have the right tools for you to do the job, on and on and on. And it takes a surprisingly short time to get used to it. You know, usually in 2 weeks to a month, it seems like you've already been there for 6 months and you know how everything works. Well, learning to trade futures is like that. It's a bit daunting at first, but the payoff for you sticking with it 2 to 4 weeks, or ever how long it takes you, depending on the time you have, is certainly worth the great reward you get to be able to trade these futures. And I'm going to talk about that now and show you some of the most important things about what you use to set up a trade. Exit, stage left. As promised, I'll get to those 4 charts and show you how the trade signals of both entry and exit work in just a moment. You've heard me say the most important and the largest part of trading is what happens between your ears. I would say that learning and recognizing the MACD trade signals for entry and exit points is only about 10% of the job. Learning to day trade the micros. This part of the job becomes easier with practice, and the purpose of this is so you can learn where, or more importantly, when to find trading opportunities. You won't win but about 55 to 60% of your trades. You'll lose about 40% of them. What you must learn to do is to keep your cumulative profits greater than your cumulative losses. Nobody wins 100% of trades, ever. This means if you try to get better only by aiming for a higher win rate of like 90%, you will fail. I know this is counterintuitive, but over time, you'll have some winning streaks and losing streaks, but on the average, a goal of winning 55 to 60% of your trades is a realistic expectation. I would say this 5% part right here might be the easiest part of trading and certainly one of the most fun parts. Opening your account, funding it, learning to operate the basic features of your trading platform. It isn't hard to do it all. Your broker has videos on how to use it, and they have live customer service operators you can phone anytime you get stuck. You might be lost the first time you see the trading platform and try to use it. I think that's normal. But using it is actually a lot easier than you might think. After all, you're not setting up to learn everything, every indicator, all forms of trading, and all the products. You don't have to do everything. You only have to do one thing, and that's just to learn to trade the Micro E-minis. It isn't rocket science, and hundreds of thousands of people do it every day. It's up to you to get over that week or two of the learning curve and get up to speed. It's actually not that hard and can be a lot of fun. About 15% of the learning process is the practice trade. You're going to be using modern software, high-speed broadband internet, modern digital device, be it cell phone, tablet, laptop, desktop, and you're going to be using the latest innovative and updated software that's ever been available to any traders in the world. About 25 years ago, the old way of practice trading was invented. Back then, brokers supplied software with play money so the customers could learn to use the software. Way back then, most people were barely just learning computers. The broadband internet we all use now wasn't available. Actually, just learning to use the software to trade with the very basic graphics back then was often a difficult thing to do. Brokers developed play money accounts so people could learn to use the software. Now, the software is very, very easy to use. You can load it and learn it to buy and sell and use charts in just a few hours. The old way was developed to help people learn the software, not so much to teach them how to trade. Now, the modern way to learn is to keep a trade journal. You can actually do a screen print, make notes right on the chart as you learn to trade. There's a link to a video in the text below that will show you exactly how to make your own trade journal and use the newest modern methods, not the old practice trade ledger system from 20 years ago. Look for Trade Journal in the link below. Now it's time to take a look at the very largest part of trading, the 70%. And this is the hardest part of all, too. How you handle the screen right now, the items on the screen, is going to determine the trading experience that you're about to have. So I suggest you stop the video, print out a screen, or make a list of these items and keep them in mind all during your practice trading. While you're looking over this list, I want to tell you what happened to me just a very few days ago. I got an email from a fellow. I know him. He's written me before. Very nice guy, family guy. And he said, "Dear Mr. Singletary, today was my first day of trading. I had 2 losing trades and 3 winning trades on my first day. I only made $100, but I can do better. What you taught me works so great. Thank you. I will keep using your system. This has changed my life." End of quote. When I read that, it scared the hell out of me because this fellow, as wonderful as he is, has no idea about the reality of trading and how very lucky he was to make $100 the first day. Now, if I write him back and tell him, well, gee, I'm really glad you're using my system, the first time he loses money, he's going to write me a really nasty letter, probably. Anyway, you got to keep those expectations very, very realistic. And we're going to go down the list now and talk about some of these items. Now, how many trades per day are you expecting to make when you begin? How many days per week are you going to trade? How many trades per week? What win rate do you expect? All these things and more here are all expectations, and your response, your emotional response to what happens to you when you're trading is going to depend largely on your expectations, and you should try and keep them realistic. Now, a question I get very often is, I did everything you said, and immediately when I placed the trade, I started to lose money. What did I do wrong? Well, usually in beginners, it's not something that they did wrong. It's just the fact they don't realize that they're going to lose about 40% of their trades, and they need to cut those losses right away. Now, this is something you have to learn during practice trading, because if you do dive into the deep end of the pool, you're going to lose some money before you realize that you've got to learn how to hold those losses down, protect your capital. Remember, that's rule number one. How long is a trade supposed to last? Well, you don't get to tell the market, it will tell you. And learning how to use those MACD indicators to be able to tell when to close a trade when you're losing momentum in the direction you're trading is vital to your success. How are you going to feel when you lose money? Nothing's wrong with you. You probably didn't do anything wrong. You should feel just about the same when you make a profit as you do when you lose. Now, I know you're going to be a little happier when you make money, but what I'm trying to say is you need to stay on an emotional, even keel. And have you practiced enough to answer these questions? Some people can do it in a week. Some people, it takes them months. And do you have the confidence to trade, or are you afraid to trade? If you're afraid to trade with real money, go back to practice trading until you develop some confidence, until you've learned that you're only going to win 50 to 60% of your trades. You're going to lose 40%. And instead of trying to obtain a high win rate of 90 or 100%, which is impossible, you got to keep it realistic and be able to get out of those losing trades very fast and to let the profits run. Okay, now I promised you 4 trades and 4 setups, 4 winning trades in 4 consecutive days. Why would I do that to you? Well, because I want to show you if you're patient enough, usually you can find at least 1 good trade a day. Sometimes you don't, but most of the time you will. It's better to trade 1 or 2 successful trades in a day. And by successful, I mean not losing money and hopefully making some, but not losing very much if you lose. Even that is a successful trade, because unsuccessful means you're losing too much money and your account will blow up. Anyway, May 12th, 13th, 14th, and 15th. The year is 2020. Let's take a look at May the 12th first. Okay, so you don't get too excited. Let me show you a losing trade first. You got a sell signal, the green under the red, about 10 o'clock on the morning. I sold it 92.50. A few minutes later, the red and green lines converge, and I have to get out about 92.65 for a $30 loss. Didn't get crazy, but not a great trade, but successful because I didn't lose a lot of money. I can see the prevailing trend of the day is down, and the market kind of flounders around until just before closing time, about 3:10, 3:20 in the afternoon. I have a sell signal here. I can see that the MACD is showing some commitment down here, it being between minus 15 and minus 20. And I have an opportunity at 4 o'clock, closing time for the stock market at 9100. Now, of course, the futures continue to trade until 4:15. So if this trader had hung on for a few more minutes, he would have made even more. But of course, I'm saying that with the genius of hindsight, so it kind of doesn't count. But that's a great trade, $240, 120 points on the NASDAQ100 Micro Emini. Okay, let's check out this chart. May 13th, same setup, candlesticks, 5 minutes, NASDAQ100 Micro Emini, MACD in the bottom, and I just pointed out the zero line for you with a black arrow. Look what happens at 9:30 when the market opens. It varies by 100 points in the first 10 minutes, which is why, personally, I do not like to trade right at the open. Too volatile, too dangerous, at least this day and time. Now, get something interesting on this chart. Look at around the time of 10:30 in the morning, Eastern time here. And do we have a buy signal or do we not? This is what I call a true gray area right here. And it just shows you how subjective trading can be. Now, no doubt, we're above the zero line with both lines at 10:35 or so, and the green line's over the red line. So, according to the guideline rule, that's a buy. But if you look over to the right margin, remember, this right margin on the MACD in the lower pane, we see that we don't have a lot of momentum. Remember, these numbers here, 0 and up is positive momentum, and 0 and down, of course, is bearish momentum. Now, this whole scale up and down in the right margin of the MACD, highlighted in yellow there, that's a relative strength indicator. It's built right into the MACD. And as you see at 10:30 in the morning, a little bit after 10:30, it's not an extremely strong signal in terms of relative strength. So would you have bought or would you have not? Had you bought, you would have had to exit the trade almost immediately with a small loss. Now, it's very subjective to whether a trader does that or not. I like to wait until patterns form a little bit, maybe 5 or 10 minutes into them before I commit to a trade. But that's just me. Now, this is a great point for you to remember during your practice trading. Make some notes about what you're thinking and why you made those moves. And this is an example, too, of how keeping a practice trading journal is so much more effective than just using a software ledger type the old-fashioned way. And remember, too, at any time you can stop one of my videos or screenshot your practice trading while you're in your software and put that into your trade journal. Okay, now the big trade for May 13th, 2020, about, depending on your subjective decision, somewhere between 11:30 and 11:40, we get the green line below the red line, both below the MACD 0 line, and we have a sell signal somewhere around 90.70. That's going to be a great trade because 90.70 may go all the way down to about 89.20. That's a net of about 150 points. That would be a profit of about $300. This is a really great trade. One of the things that makes it really good is you see on the right relative strength indicator scale on your MACD went way down to 40 or 50, and it went down so fast there was really no drawdown on the trade. We didn't go into negative territory on the trade at all. Okay, now let's move over to May the 14th. Standard setup here, NASDAQ100 Micro Eminis, MACD 5-minute candlesticks. And a lot of people really like to trade the Globex or after-hours market because it's a little bit safer sometimes. As you can see here, in the blue is Globex and yellow is the day session there. You can see Globex is not nearly so volatile, not all the up and down action quite as fast as you see over here in the day session, which means it's less risky. And some people think that's less opportunity and they prefer the day session. It's a personal call, and either is fine. Okay, here's a fun trade, and sometimes you get a gift, G-I-F-T, an easy trade. A little bit after 7 o'clock in the morning on Globex, a couple and a half hours before the market opens, we get a sell signal here, green below red, both below 0 at about 9,000. I'm rounding off just a little bit here to make the math easy. And you can see we get a steady downtrend that continues on until around 9 o'clock, just before 9 o'clock in the morning. We can see an exit here as we get an MACD crossover, that green and red come back together right about here. And we'll call it 8,900. So we made 100 points. That's $200, the difference between 9,000 and 8,900, of course. And what's so great about this trade, look, there's hardly any drawdown. A drawdown, you remember, is a negative on the trade during the trade. And when you have that low volatility like you do on Globex, you can pull off a trade like this without a lot of drawdowns. Another advantage of lower volatility. Now, in case you didn't follow, we made a 100-point profit. It's $2 a point, so the profit's $200. Now, that's a great trade. It's an easy trade, and these are the ones you live for. They make up for a lot of those smaller losses that you get from time to time. But remember, you're going to lose a lot of trades, and losing properly is part of winning. This should be getting a little bit easier to you now. This is May 15th, 2020. And if this chart looks familiar, it's because it should be. It's actually the very first trade we did at the beginning of this video. Can you see the sell and the buy signals more easily now after you've been through this video? I hope so. If you're learning to do that, then you're making a lot of progress. And like I say, it just takes practice. So hang in there. You practice enough, you gain some confidence, and that will help you trade better, because you can't let your emotions bounce you around because you lose a few trades. It's just part of the gig. The like button is a way for you to tell me that you'd like to see more videos like this one. When you click the like button during one of my videos, it says, yeah, I want to see more like this. I'd appreciate that. It helps me get better quality videos up here on the channel. If you're new to the channel, look below for the beginners playlist. There are 2 of those that start you off at a good starting place for the channel. And this channel is supported by book sales from my book here, and it has a lot of the information you need all in one place that makes it a little bit faster and easier to learn. So if you'd like to visit that, look for the book link below. I'm Don Singletary. I hope every day is a payday for you. And thank you.